Hello, everyone, and welcome to our Home Buying Simplified webinar presented by Signal Financial Federal Credit Union. Before we go into our content, we wanted to do some introductions so you all know who we are. So my name is Saeed Halim. I'm the VP for Real Estate and Consumer Lending here at Signal, and I'm joined here by PJ, who's going to introduce himself as well.
Hi, my name's Phil Alzheimer. I also go by PJ, and I'm one of the loan officers here with Signal Financial.
All right, thank you, PJ. So what we've done is we've broken down the home buying process into three parts. So first, we'll talk about pre-home buying and how to prepare yourself for success. We'll talk about what you can do during the home buying process, as well as what you can do afterward for it to be a successful experience overall. So we'll start with preparing to buy a home. One of the first and most beneficial things you can do is check your credit history and check your credit score. And that will do a couple of things for you. One, it'll give you an idea of what your credit score is, and that has an impact on whether or not you're approved. It has an impact on rates, terms, and costs. But also keep in mind that credit scores across different lenders are going to vary because, there's different bureaus and different models that are out there. So it'll vary among the lenders, and it also could vary among the different credit checking tools that are out there. One of the things you want to look for is to check for issues. So you want to see if there's any potential fraud on your credit report. You want to look for inaccurate reporting on payments or on loan balances, as well as any missing loans from your credit history. And if you want more information about checking your credit and understanding your credit, one thing that we advise you to do is check out our Understanding Credit webinar that we have on our webpage, as well as visiting some of the credit review sources that we show on the right side of your screen. So you can go to NerdWallet and check your FICO there. If you have a credit card with Signal, you can check your credit there. Credit Karma is a good resource, as well as annualcreditreport.com, which is the government-approved website for checking your history once a year. So again, feel free to check out those sites and check out our webinar if you want more information. So pop quiz time. 80% of non-homeowners believe that a minimum down payment of 10 to 20% is required. Is that something that's true, or is it false? So despite some of the misconceptions that are out there, you don't necessarily need to put down 10 to 20% in order to buy a home. And we have loan officers that can help guide you for to the best option for your budget. So I'm going to pass it over to PJ, and he's going to talk us through some of the benefits of working with a loan officer from the beginning of the process.
So one of the things that you want to figure out when you go in to purchase a home is what you can afford to pay every month. You want to make sure that your purchase price and your monthly payment fits in your budget and what you're comfortable paying. You also want to know how much money you need to bring for not only the down payment, but any closing costs and what we call prepaid items, paying any property taxes or homeowners insurance that are due. Once we've established this, we'll give you what's called a pre-approval letter, and that will be an important tool when you go to meet with a realtor. In order for a realtor to take you around and show you homes, they're going to want to make sure that you've spoken with a loan officer and that you can afford to purchase the home that they're going to show you. They just don't want to drive you around to show you homes if you're not approved. So there are different types of mortgages, the most common being a 30-year fixed rate mortgage, meaning that the interest rate on your loan is fixed for 30 years or even 15, where your principal and interest payment is not going to change during that fixed time. The 30-year rate is typically a little bit higher than the 15-year rate. However, because the 15-year loan is paying off in half the time, your payment is still larger with a 15-year loan, and it may not fit in your budget. Most people elect to go with a 30-year loan. We also have adjustable rate mortgages, and these are usually fixed for a certain amount of time, say 5 years or 7 years. And at the end of that time, then the interest rate can change, which will change your principal and interest portion of your payment. So they can be a good tool to get you in with a lower rate. But you have to keep in mind that after, say, 5 or 7 years, that payment can increase on you. And we also have low down payment options. You can put down as little as 3%, 5, 10, 20% or more. So one of the things to do to get started, if you're on our Signal Financial webpage, in our lending section, you can go to mortgage resources. And here you have different tabs that are going to show you different things, and we're going to go over a few of those next. So one of the first things you want to do is, if you're interested in having a loan officer contact you, is fill out this information, and then we will give you a call back and go over different programs and see what program fits your needs the best. Another online tool that's on the webpage is our mortgage calculator. In the orange box in the center of the screen, you'll see the total amount. That's the purchase price that you're going to buy, along with how much you want to put down for a down payment and what your estimated interest rate is going to be, along with the term. From there, on the right-hand side, across the top, you're going to see your principal and interest for $22.92. And if the loan goes the full 30 years, your total in payments is going to be about $825,000, and it's going to mature in February of 2052. And then down at the bottom, it'll give you different principal and interest, and you can see how your principal is increasing with each payment and your interest is decreasing along with lowering your balance. Now, you want to remember that this is just your principal and interest that we're talking about. You have other portions of your payment. You're going to have your property taxes, your homeowner's insurance are going to be a part of your payment all the time. And you're also going to have potentially mortgage insurance or homeowners association or a condominium fee. And those would make up what we call your housing expense. So following up on that, your basic payment is always going to contain principal and interest, along with an escrow to pay your property taxes and your homeowner's insurance. Homeowner's insurance is different than mortgage insurance that we'll get to in a minute. Homeowner's insurance is going to cover things if a tree falls on your house, or if there's a, God forbid, a fire or a flood, that's the homeowner's insurance is going to help fix your home. The mortgage insurance at the very bottom, this helps cover the lender. Saeed talked about at the beginning, a lot of people feel you need to put down 20%. If you put down 20% or more, you're not going to have to pay mortgage insurance. But if you put down less than 20%, you're going to have to pay mortgage insurance. What mortgage insurance does is it helps cover the lender should they have to foreclose and potentially take a loss on the property. What it does for you is it allows you to purchase a home with less money down. So it helps you get in a home sooner rather than later, and you don't have to save up tens of thousands of dollars to try to put down 20%. Those items are going to be included in your mortgage payment. But one other aspect of what we call your housing expense would be a homeowners association fee or a condominium fee. So some new home subdivisions, you're going to have some common area grass cutting along with trash removal, and that's going to come at an expense. So they charge you a monthly or a quarterly homeowners association fee, and they can vary depending on the neighborhood. And we have to calculate that in part of your housing expense. So when we pre-qualify you, we're going to pre-qualify you generally for a payment that includes these items. So different homes will have different property taxes, could have a homeowners association or a condominium fee. And until we have a specific property, we have to just kind of take an educated guess at what you're going to be paying. And then once you see a property, you want to send me a copy of the email or the address to the property and say, hey, PJ, we're going to go out and look at these two properties. Can you work up some numbers for us? And then I'll give you a pre-approval tailored to that specific property. So that way the realtors know that we talked about it, took into consideration the exact property taxes, homeowners insurance, and the any HOA or condo fee for that property.
Good.
So along with that, for the first-time homebuyer program, there are some things that you can qualify for where, you know, someone that's already owned a home may not be able to do. One of them is having a lower down payment. You can put down as little as 3% towards the purchase price of the home. There's no geographic restrictions. You can use this program to buy a home anywhere you would like. Some other programs limit you to where you can buy. You can also use it to buy a single family home as opposed to a townhouse or a condominium. You can use it to buy any of the different property types. They're also going to come with a fixed rate loan. So that way you don't have to worry about, like we talked earlier, your principal and interest changing on you. They will stay fixed for the life of the loan. The mortgage insurance that we discussed, that can go away with this program. There are other programs that the mortgage insurance is with you for the life of the loan, and the only way to get rid of it would be to refinance the property or sell the home. With this program, the 3% down, you can have the mortgage insurance removed once you've established 20% equity in the home. Now, there are some certain qualifications that you have to meet. Number one is at least one of the buyers of the home has to be a first-time home buyer. So if your spouse has already owned a home before and you have not, the program can work for you. Another thing that you have to do is you have to actually live in the home. You can't buy it as a second home or an investment property. It has to be your primary residence. And the last thing, there's an online homeowners education webinar that you can take, and it takes about an hour or two to go through, and you get a certificate at the end. And you'll have to take that at some point during the mortgage process, and we'll need the completion certificate before we can close on your loan.
All right, very good. Thank you, PJ. So I'll now go into the Home Advantage program that we have. So the way that you get to this is the mortgage resources page that PJ showed us earlier. And what Home Advantage does is quite a few things, actually. So one, it allows you to search for homes in a certain area based on your budget, the number of bedrooms that you're looking for, bathrooms, and square footage. But beyond that, it also goes into crime rates, school ratings, and weather in a particular area. So it gives you more information than just the property itself. Home Advantage can also help you find a reputable real estate agent. And the agents that are listed there are full-time agents, and they have at least 3 years. So you know you're getting a quality, reputable real estate agent when you're searching on the Home Advantage page. And lastly, another perk is that you can get a cash rebate equal to 20% of your agent's commission that you can either accept as a credit towards closing, or you can take as cash outright. So a lot of perks to Home Advantage, and we'll talk through navigating through it now. So when you go to the Home Advantage page, you'll notice a green button that says Enroll in Home Advantage. While we do advise you to enroll because it'll just make it easier to use it later when you actually want to take advantage of the program, if you just want to take a quick glance, it will allow you to do some searches and look through the page without necessarily enrolling. So keep that in mind. If you just want to check it out, please do so after the webinar. So if you're looking for a home in a particular city, this is where you would enter it on the screen. So for example, we did a search in Kensington, Maryland, where our credit union is headquartered, and you hit search. The first thing that you'll see are search results in a map view. So if you have an idea geographically where you want to live, let's say maybe you want to be near a certain school, a certain highway, a certain shopping center, a certain park, wherever, the map view will help you identify where the available homes are, and you can click on it that way. If you notice on the right side of the screen, there are different options. One of the things we wanted to call out that we preferred as far as our search is the list view. So if you toggle to the right and click the list view, the results will come up this way where you can see everything in one screen in terms of the address, the location, the price, the number of bedrooms, baths, and square footage all on one screen. So it really depends on how you prefer to search and what's more important to you. So once you find a property you're interested in, you click on it, and then on the right side, you click on Details View, which we have highlighted on the slide there. And that opens up a ton of different pieces of information about the property. So you can see at the top, it shows you the price, it shows you the size of the home in terms of bedrooms, baths, and square footage. But it also, if you look a little towards the middle of the screen, it shows you some more photos, and then there's school information, there's neighborhood information. If you click even further, it'll show you weather information. So again, what we wanted to call out here is when you're searching for a home, it's not just about the specifics of the home fitting what you're looking for. There's other factors that can drive your decision as well, such as the schools in the area, the crime information in the area. So all that's really important in your search, and we wanted to call that out with the Home Advantage program. The other neat thing is that it'll help you find a realtor. So at the top, if you click the drop down for agents and click find an agent, again, we just use Kensington as an example because that's where we're headquartered. You can see the results that come back. If you click on view profile, it gives you more information about that agent, and then it gives you the ability to make that individual your agent, reach out to them and coordinate starting to look at homes together. So now I'm going to go ahead and pass it back to PJ to talk through some of the steps to be mindful of during the home buying process.
So, one thing just real quick to go back to what Saeed was talking about with the listings that you can see. Those are much more accurate than going on Redfin or Zillow. You're actually getting into what we call the MLS, where you can see stuff that may not be listed on the other sites. So, but with that in mind, you want to try to see a lot of different types of homes and a variety of homes. A home is something that you're going to be in for many years. You're not going to change homes like you do cars. So you want to make sure that you buy a home that fits your lifestyle. If you're planning on having children or expanding the family, then you want to buy something a little bigger than a one-bedroom condo that may fit your needs today. And you also want to look at homes to see what you like and what you don't like, whether it's a layout or a kitchen or a bathroom. So you want to take a look at as many different kinds of homes as you can, if not just online, but also going out to see them. So our next slide, we're going to talk about negotiating a fair offer. And one of the things that having a realtor in your corner is going to do for you, they're going to be familiar with the area that you're looking in, and they're going to know what homes are selling for in that area. One of the ways they do that is they do what's called a competitive market analysis, or a CMA. And they're going to look at similar style homes, similar square footage and room counts. And they're going to tell you what other homes have been selling for and what they feel is a fair offer for the home that you're looking at. You don't want to submit an offer that is too high for the area, or that's too low and could insult the listing agent, and then they won't talk to you or even try to negotiate. So you want to make sure you come in with a good offer right off the bat. You also have to look at what upgrades the home has, whether the kitchens have been updated, the bathrooms, whether it has a deck or not. These things all add value to your home, and some homes may have it and some homes may not. And then you also have to look at what things are going to be coming down the pike. So if you buy a home today, is the roof near the end of its life? Are you going to need to put a roof on the home, or let's say a water heater? A lot of these expenses can come at a time when you're not expecting them. And right after you buy a house and then you find out that you have to replace a water heater or roof, isn't the best time to do that. So we'll get into that later as far as home inspections. And then you also want to look at how long a house has been on the market. A home that's just come on the market, they may not be willing to deal on the price. They may want to sit there for a little bit and see if anybody is willing to pay the full asking price. But if a home has been on the market for a month or two, they may be willing to start working with you on the price. And again, that's going to be a matter of picking out an agent that is experienced and knows how to negotiate on your behalf. So next, we're going to talk about a seller credit. So when we talk about how much money you need for a down payment, we're talking about 3%. Closing costs, depending on the area, in the DC area, they run about 4% of the purchase price. Now, your realtor with the Home Advantage program will give you a realtor credit that can be used to offset some of these closing costs. You can also ask the seller for a credit, and that's typically can be up to 3%. And again, it's a matter of how long the home has been on the market and how much they're willing to negotiate. And that's something your realtor can help work with you. That way they can help you get into the home with less money out of pocket, which means that you have more for future needs, home decorating, or any renovations that you may want to do to the home. So we talked before about hiring a good home inspector. You want to make sure you find one that has, just like anybody else, has been in the business for a while, knows what they're doing. You can look online for their, Google reviews or Yelp and, see how they're rated. You want to make sure that you're with them when they do the home inspection and that you pay attention to what they're pointing out. Sometimes they may say something when they're there that doesn't necessarily make it to the report. I've had home inspectors be very thorough and actually go through the yard and show concerns about drainage and give me some tips on that. So once you have the home inspection, you want to review it with your realtor and find out if these are items that you should be concerned about and want the seller to repair or give you a credit back in a discount. Let's say the roof is nearing the end of its life. Maybe you want to have a new roof put on or get a credit back for $5,000 or so that you can use to put towards the replacement of the roof when that time comes. And you also want to know when it's time to just walk away from a home. I had one this week that the home inspection revealed some issues that the realtor and the buyer didn't notice. But the home inspector had some concerns about it, and it was a little more than the purchaser wanted to tackle. So they thought it was best to, cut ties with that property and move on.
Good. All right, so now you've purchased your home, you're in it. We wanted to talk about some of the things you can do after you buy your home to ensure that overall it's a pleasant experience for you. So we wanted to start off by asking this question through a pop quiz. What percentage of home buyers experience an unexpected repair within the first year of owning their home? The answer is 44%. I know this is a poll. I think the real answer is a little higher than 44%, but we'll go with it. Let's say, it's close to half the people that buy a new home end up having an unexpected repair in the first year. And on top of that, 31% of those homeowners don't have the money set aside for home repairs and improvements. So a lot of what PJ talked about earlier, getting a credit at closing, you can pocket that money in case an unexpected repair comes up. And the point about hiring a good home inspector, if you have a good home inspector, it reduces the chances of having one of these unexpected repairs come up. But let's say they do come up. Let's take a look at some of the average costs that are out there for common home repairs. So a new roof, again, this is all going to vary based on the property and the location, but As far as national averages, you're looking at $11,095 for a new roof. A water heater can go, up to $1,150, and I've seen them for even more depending on the type of water heater, the size, and the property. Replacement windows can go $350 to $500. An AC unit averages $5,210. Keep in mind, bigger homes are going to have bigger AC units. Some of them have 2 units, so just keep that in mind when you're looking. Siding can run you $6,000 to $8,500, and bear in mind that that's the bare minimum. Once you start putting different options on there and different colors and textures, that can also run the bill up quite a bit. So again, back to the point that PJ was making, a quality home inspection is very, very critical. Can't stress that enough. But there also are some other ways that you can prepare as well. So to be prepared for any upgrades, maintenance, and unexpected repairs, one, you want to make sure you have a cash reserve left over after you settle on your new home. So you don't want all of your savings and all the money you have to just go towards the property. You want to have some left over just in case. You can also take advantage of some credit cards that are out there. So for example, we have a cashback credit card, we have a rewards credit card. That's an option to help prepare for things that are unexpected. You can also discuss buying a home warranty with your realtor. So oftentimes, as part of the negotiations and the transaction when you're buying a home, sometimes the seller will offer to buy a home warranty that'll last, let's say, for the first year. So that gives you that comfort when you buy your home, knowing there's this warranty that'll cover some of the major things that can go wrong in the home. And sometimes you'll find that sellers are willing to pay that for you. The other thing we wanted to mention is to consider a home equity loan or line of credit. So once you've built enough equity in your home, you can have a home equity line of credit through appreciation and through making payments on your home, and you can borrow against that equity for unexpected repairs, for upgrades, really anything that you want to do with the house. So that summarizes what we wanted to share today as far as preparing to buy a home, some of the things to keep in mind during the process, and some things to do after you buy the home. So with that, we wanted to thank you for spending some time with us today and hearing us out. We genuinely appreciate it. And PJ, anything you wanted to say in closing?
No, just wanted to thank you for taking the time to view the presentation. And if you have any questions, please give us a call or shoot us an email.
Thank you so much.
All right.
Take care, everybody. Bye.
Thank you.